owning a bunch of real estate is not all it's cracked up to be. I own a bunch of real estate and it's a lot of work, okay? I also own a lot of notes. And I like that income a lot more. And so I want to hopefully shift or change your mentality a little bit here tonight to get thinking about the note business. Now, here's what you need to be thinking. All right, guys, so here's my question, okay? I want you to write down monthly. Lee, if I could have an extra $3,000 per month, that would be transformational for me. $3,000 a month. Maybe it's $800. Lee, if you could give me $800 a month, that would be great. Lee, I'm about your age. I don't have a great deal of confidence in Social Security, so I'm not so much looking for subsidy income. I'm looking for real income. Okay, so you need $7,500 per month. Or maybe it's $10,000. Okay? Now, from here, I want you to reverse engineer. Okay? So if I need $800 a month at 12 months, okay, that's $9,600 per year. Now, if I reverse engineer that and I simply say $96,000 at 10% is going to produce $9,600 per month, which means I only need $96,000 to create the income that I need on an annual basis that's consistent and ongoing. Now, just like Jane's story, okay? She started with $47,000. She generated, in just the last 60 months, she's made over 78 grand. And she still has her original principal, which has also grown now to $140,000. She went from $47,000 to $140,000. Because if we know what we want the end result to be, okay, and we begin with the end in mind, we simply determine, okay, I can get a 10% return pretty consistently on notes. That's pretty normal rate. If I got 96 grand, I could just put it in notes. Now, I was having a conversation the other day with another client who owns a really nice piece of real estate, beautiful home, and she's been using it as an Airbnb. She's got about $1.5 million in equity sitting in the house. And I asked her, I said, have you ever considered selling the house? And she said, well, Lee, this has been my dream house. I just got it all fixed up. I've got Airbnb. I said, okay, follow me here. Follow me. What if we sold the house and we took the $1.5 million and we invested it in notes paying 10%? This would produce $150,000 per year. And that is for life, okay? Because every time a note pays off, we're going to take the proceeds from the payoff and we're going to go buy another one. And when that pays off, we're going to take the proceeds from that, we're going to go buy another one. So that we maintain this very consistent income. And that's not right, that's a year, okay? So here's my question. Could we or will the current investment, the Airbnb, that has $1.5 million in equity trapped in it, will it consistently produce $150,000 a year in passive income? Which means you don't have to be posting it on Airbnb or VRBO or any of these websites. You don't have to be physically going over there and cleaning it and, managing the tenants and the turns of these Airbnbs. And don't get me wrong, guys, I own Airbnbs and they're a great little investment, but they're a lot of work. What if we were to just sell that thing, put that money into notes that are going to produce a much more stable, consistent rate of return? What would that look like? And I said, I'm not trying to convince you. I said, just think about it. And so I want to challenge you guys that are watching right now to think about it, okay? Think about where you have money. A lot of people have money in a 401k for a company that they don't work for anymore, okay? So you were at a company for 10 or 15 years. You've got couple $100,000 sitting in a 401k and you don't work there anymore. Well, if you don't work there, you can take that 401k and you can do with it whatever you want. Now, our recommendation is you take the 401k, you put it into a self-directed IRA so that this return right here is 100% tax-free. Because you see, when you put money into a self-directed IRA, you pay tax on the seed, not on the crop. So you pay tax on the money going into the IRA, but you don't pay any tax on the money coming out of the IRA. So now if we can take this 1.5 million bucks, roll it into a self-directed, which would be, let's call it, well, we'll leave it at that, okay? $150,000 a year tax-free. So do you have a real estate portfolio right now with equity sitting in it? Do you have a rental that you own free and clear? And let me give you some painful math, shall we? The average home in America right now, and let me give you the stats right here. The average home in America is $367,711, okay? Average house. Now, the average rent in America right now is $1,850. Okay? Now, if we take $1,850, $1,850 times 12, we're generating $22,200 per year. Okay? Now, take out of this 10% for maintenance, take out of this 10% for management to make it truly passive, okay? We've got to subtract $4,400 for those things, which is going to leave us $17,800. Now, if you take $17,800 and divide it into that, divided by 367,711, you are earning 4.8% annualized yield on your property. Okay? Now, normally when I have this conversation with people, say, yeah, but Lee, if I own the note, I don't get any of the appreciation. I own the real estate, so I'm going to get the appreciation. Okay. Well, remember what I read to you guys earlier, that appreciation this year is going to be 2%. So if I add 2% over here to your appreciation, what am I getting, 6.8? Meanwhile, if we were to sell the asset, put $350,000 into a self-directed, okay, we're going to pay tax on that. Let's call it 30% tax. Which is going to be roughly, let's call it $100,000. So $250,000 goes into self-directed IRA. We stick in a note at 10%. It's now paying us $25,000 per year. Okay. This is tax-free income, and the $250,000 doesn't go down. Okay. So tax-free. Now, again, I'm not telling you what to do. I'm just trying to get you to think, would this be a better investment to sell the asset and get it into a note environment so that you can get the tax-free income without the headache of ownership and management? Because this note is going to transfer far easier than this house. Now, here again is my recommendation. Again, not advice. Just if I were you, this is what I would do. Keep the house, get a loan against it, okay, leverage it, get the loan proceeds, buy notes with it, and then you get the best of both worlds because you still get the depreciation of owning the rental. You get to write off the interest on the leverage, and you still get the cash flow from investing in the note, okay? Now, what I'm trying to get here, guys, I just want to get your mind thinking, because oftentimes we kind of set it and forget it. So we've invested in things, we got money sitting over in this bucket, we got money over in this bucket, and we never think about how we could reorganize it and get maybe different or better results. And so what I would like to do, I would like you guys to schedule a call, okay? Now, anybody who would like to just have a strategy session, I don't have a link for you. This is not part of the thing. But if you would like to have a strategy session, okay, where let's just talk, all right? Let's look at what you got here, there, and everywhere else. I don't have a dog in this hunt, all right? I like notes, but I also own real estate. I own stock. I own crypto, right? I got all this stuff just like you. But the question is it producing the greatest amount of yield that is possible if we just maybe tweaked some things?